Good, then I think we are ready to go. Also given the intense schedule that we have before us today. Dear ladies and gentlemen, dear distinguished guests, dear speakers, I welcome all of you warmly to our Asia Regional Dialogue on the role of insurance and data in closing the climate risk protection gap. My name is Alexander Jäger, and I'm the Program Director of the GIZ Regional Project Regulatory Framework Promotion for pro-poor insurance markets in Asia, short RFPI. Today, I have the great pleasure to be your master of ceremony for the event. For those who don't know me, I had the honor to assume my current position in Manila in October last year, after working many years for GIZ and in the private industry on mostly non-life insurance. The event today is organized by the Access to Insurance Initiative, the Microinsurance Network, and the GIZ RFPI team in partnership with the Mutual Exchange Forum on Inclusive Insurance, short MEFIN. The background of today's event, unfortunately, is well known to everybody here, I suppose. With climate change, natural disasters are becoming more frequent and more severe. This affects developing and emerging economies in particular because of a higher vulnerability that can be attributed, amongst others, to strong reliance on weather-reliant activities such as agriculture. At the same time, there is a lower coping capacity with these events, amongst others, because of a lack of accessible and affordable insurance services, which could contribute to closing the climate risk protection gap. In order to address these rampant needs, this event brings together regional and international experts and practitioners to share their experiences, best practices that may help to provide answers to the following questions of the seminar. The first question that we want to address today is, why is today's insurance not yet enough to close the climate risk protection gap? The second question is, what is the role of technology and data in pushing the limits for climate-related insurance services? And last but not least, how can we move forward? Now, having opened this event, I would like us to have a quick look at the agenda. So maybe the next slide, please. At the very beginning, we will have some opening remarks from Deputy Commissioner Erickson Balmes from the Philippines. And this is followed by a brief intro into setting the scene why we are here today by Hannah Grant, Head of Secretariat of the Access to Insurance Initiative, and Katharina Pulvermacher, Executive Director of the MIN. We will then have a short interactive poll, followed by the first plenary session, which will be on a change that needs to come. So discussing this issue will be the colleagues mentioned, and moderated will be by Lorenzo Chan. This will be followed by a second plenary session on building the right data blocks, a session that will be moderated by Miha Yangle. And then, if there is some time left, the pleasure is about me to do the closing remarks. Before we start, just a few housekeeping rules, very normal. Please ensure that you're muted when you are not speaking, that we have the highest quality. Please note that the session is being recorded and the presentations will be made available after the event. Please use the Q&A feature and ask questions as much as you want to your heart's content, so that there will be lively discussions. And last but not least, for any technical issues, please message the MIN executive team. You see that in the notes function of Zoom via the chat, just in case anything should arise. Now, having gone through the agenda and the housekeeping rules, without further ado, I would love to ask Deputy Commissioner Erickson Balmes to provide the opening remarks for the event. Attorney Balmes is the Deputy Commissioner for the Management Support Services Group of the Insurance Commission of the Philippines, and he's also the chair of the Technical Working Group of the Philippines Catastrophe Insurance Facility. His knowledge on climate and disaster risk is backed up by his long years of experience, obviously, and an executive master's degree in disaster risk and crisis management. Attorney Balmas, the floor is yours.
Thank you, sir. To Dr. Alexander Yeager, Program Director, Regulatory Framework for the Promotion of Proper Insurance Market in Asia of GIZ. Distinguished colleagues from Access to Insurance Initiative, GIZ, the MEFIN Network, the Microinsurance Network, the International Association of Insurance Supervisors, or IAIS, and fellow stakeholders in the quest for better climate risk protection. Good morning, good afternoon, and good evening to all of you. It is my fondest hopes that all of you are well and healthy as I welcome all of you to the Asia Regional Dialogue on the role of insurance and data in closing the climate risk protection gap. In better times, and hopefully things are getting better for all of us, there is a good chance that events like this will be face-to-face. However, for the time being, as we all try to navigate a world with COVID-19, this online gathering will suffice. But let us not allow our enthusiasm to suffer just because we are doing this online. Because disasters and calamities will happen, it has never been a question of if, but always a question of when. Undeniably, climate risks play a very significant role in the spawning of disasters of ever-increasing magnitude. Thus, climate risk will have to be addressed, and part of the mechanisms to do so in addressing this risk is to close the climate risk protection gap. We need to stress the urgency of closing the climate risk protection gap. We need to act now because to hesitate might be fatal for all. In addressing the climate risk protection gap, insurance and data will play indispensable roles. Insurance as a risk transfer device provide the mechanism to fund a Build Back Better approach or a recovery post-disaster. On the other hand, data will provide a reliable bedrock upon which future assumptions and actions can be anchored on. To be specific, the correct insurance products based on reliable data will augur well for countries in the Southeast Asian region, a region which has its own fair share of climate risk protection challenges and of pronounced vulnerabilities. Relative to data, the equation is fairly simple. Gather the correct data and use them, and you can take the correct action. It's the simple equation here, garbage in, garbage out. However, reliable data gathering presents its own set of challenges. As a regulator here in the Insurance Commission, our work with the Philippine Catastrophe Insurance Facility, or PCIF, together with the Philippine Insurers and Reinsurers Association, or PIRA, the National Reinsurance Corporation, or NATRI, with the technical assistance from the World Bank and the invaluable support of GIZ as knowledge sharing and public awareness partner, has highlighted the need for proper data collection, utilization, and sharing. Without the correct data, our technical people at the PCIF TWG cannot make reliable models and assumptions, which are very much needed to push the PCIF forward to its realization. Fortunately for us, all stakeholders in this worthy undertaking have found the willingness to pitch in by sharing their own data sets to enable the body to present a more complete picture for the appreciation of everyone and for our collective action. To my mind, as chairperson of the PCIF TWG, the kind of unselfish sharing of relevant information that we have witnessed at the different sessions of the PCIF TWG present a model or a blueprint on the level of cooperation that all regulators and their regulated entity should commit themselves to for future undertakings. That being said, anyone among the stakeholders present today are most welcome to share knowledge and information with us at the PCIF-TWG as we continue to work towards fleshing out the PCIF for a more resilient Philippines. Once again, welcome to all of you, and may this event provide all of us the opportunity not only to share knowledge, but also to collaborate on key areas on climate risk protection, insurance, and data. I wish all of you better and safer days ahead. Mabuhay. Thank you.
Salamat po, .com. Thank you so much for sharing, especially the insights from the Philippines Catastrophe Insurance Facility. And thank you for opening the event. Now, next, I would like to ask Hannah Grant, the head of the HYI Secretariat, and Katharina Pulvermacher, the Executive Director of the Microinsurance Network, to provide more details on setting the scenes and why we are here today in a wider frame.
Thank you, Alexander, and good morning and good afternoon, everyone. It's my pleasure to welcome you to this Asian policy dialogue on the role of insurance and data in closing the risk protection gap. Currently, the protection gap for climatic events is huge. In Asia, I think based on World Bank data, it's thought that over 90% of the population are unprotected against the impacts of climate change. The latest Intergovernmental Panel on Climate Change, IPCC assessment report, was actually released just in February, which is based on the findings of 270 authors from 67 different countries, highlighted how the current 1.1 degree warming is already having a severe impact. 50% of the world's population face seasonal water scarcity every year. The lives, health, and livelihood of more than 50% of the urban population are also affected by climate change. And they calculated that actually 3.3 billion people who are now highly vulnerable to climate impact. And as temperatures increase further, this will only increase. So as Deputy Commissioner Baum said at the beginning, the time to act is really now. The report also stressed how enhanced mobilization of and access to financial resources are essential for reducing adaptation gaps. And it recognizes that improving access to credit, improving access to credit, insurance is one of the key financial adaptation solutions to buffer against variability in resource access and abundance. I mean, insurance is not a silver bullet, but when combined with other tools, risk reduction, risk mitigation, it can make people more resilient to climatic events and much better prepared to rebuild after a disaster strikes. Without insurance, when climatic events occur, it might lead to productive assets needing to be sold, making it difficult to restart businesses, people unable to repair property following storm damage, children need to be taken out of school as families can no longer afford school fees, and people needing to borrow funds from friends and family, or worse, loan sharks, to get restarted. I mean, looking at the registrations for today's event, I think this is something that most of you are aware of, but the increased recognition of this from those outside the sector, and particularly policymakers, I think is vital. In a recent MicroSave study, looking at climate and disaster risk insurance in the Asia and Pacific region, out of the 22 countries included in the study, only 2, which was Vietnam and Indonesia, actually recognized insurance within their disaster risk management frameworks. And therefore, I think this reference to actually insurance in the recent IPCC report is definitely something to be welcomed. But if insurance is such a valuable tool, why do such significant protection gaps continue to exist? The Access to Insurance Initiative has recently embarked on its 3rd Inclusive Insurance Innovation Lab, which is focused on building resilience to climate risk. And this is actually one of the key questions the country teams have been grappling with. The 4 country teams involved in the project come from different regions, Costa Rica, Grenada, Zambia, and Zimbabwe. However, the challenges they identified when looking at why climate risk insurance is not there as much as needed, were actually broadly the same, and I think would also be applicable in Asia as well. It was lack of awareness among vulnerable populations on climate risk and its impacts and the mitigation tools available. Lack of market awareness as well as awareness among the population, so a lack of availability on the supply side, products not being affordable or not meeting people's needs, and many products remaining in pilot stages. And then lack of data, so data on the target population, historical data on climatic events, and also for the use in underwriting and modeling. According to a survey of leading financial institutions by Willis Towers Watson, 80% of respondents reported that availability of data is the single greatest test firms expect to face over the next 5 years in order to be able to address climate risk. This concern over availability of good quality data is something we want to shine a spotlight at during today's event. On a more positive note, technological developments and the digitalization of the insurance value chain provides hope for the future. It has helped to support product innovations such as index insurance, facilitate easier access to the client through things like mobile networks, geo-localized clients, which is helping in the risk-related product pricing, collecting premiums and providing payouts in a timely and transparent manner. However, for climate risk insurance to work, it is also essential that there's an enabling regulatory environment in place, which allows for technological innovation while still protecting consumers. The MicroSave study I mentioned before also mentioned how it looked at 22 countries, as I said, in the region, and it felt that the regulations were not seen as enabling for the development of climate and disaster region business models in the region. For instance, the 26% tax on non-life insurance products in the Philippines was stated as a real challenge to the development of agriculture insurance markets in the region. Developments in recent years in index insurance regulations is to be welcomed. However, there is a real need for more countries in the Asian region to make changes to ensure index products do not fall outside of the scope of supervision and leave policyholders unprotected. With that, I would like to conclude, and I hope I've given you some orientation as to the why of why we are here today. And I'd like to pass over now to Catherine for her presentation. I look forward to the rest of the event, and I hope it stimulates some fresh thinking on the topic of climate risk insurance, and more importantly, action. Thank you. Catherine, over to you.
Thank you, Hannah. I can only echo what Hannah's been saying. There is a sense of urgency. We face incredible challenges in the world today, and these challenges are only accelerating, both in terms of their severity and in terms of their volatility and unpredictability. And data, as Hannah mentioned, is key. However, when we use the term data, I think it's important to recognize this is a very, very broad term. I mean, we're basically talking about facts, information. And so I like to use my introductory remarks to just take a little walk around what can be meant, all the different points at which data is used in the effort to develop effective risk management and insurance services to the 90% of people that are underserved in the Global South and specifically in the Asia region. And today our focus is, of course, on climate risk. So we very often, when we think of climate risk, immediately jump to thinking about the impact on crop yields and so on. And so let me start there in my little walk around the data journey. We know that it can be a struggle to, well, we know that where the data is available by satellite. So there are innovative ways for measuring soil quality and the humidity of soil. But what we also know is that this data is available at different resolutions. And that can have a particular impact in a situation where the vast majority, more than 90% of farms, are on less than 2 hectares of land and may be very difficult to measure. The interpretation of this data is also tricky. It's not straightforward. It requires interpretation. Interpretation requires technological expertise, and technological expertise often gravitates towards, or if I can say, it follows a more financially interesting path than might be the case of protecting smallholder farmers who, by very definition, are usually not very affluent. That's part of the information. The other part of the information that is missing, and I learned this to my surprise recently, there's very little data about the crops that are actually being grown in a given country. So the kind of systems that are available in the US, where in order to receive subsidies, farmers have to report on what they're growing, simply don't exist in much of the developing world. And that means two things. One, very little is known about what is being grown. And that has a corresponding impact on prospective food security in these particular countries, and of course around the world. So I think that's important on the agricultural front. And as Hannah mentioned, climate change is not only impacting lives and livelihoods in rural areas, it's also having an impact on aquaculture, it's having an impact on the many, many people in Asia's very fast-growing cities, many of which are mega cities and many of which are coastal cities. So exposure to typhoons, I'm sure that my colleague and our chair, Lorenzo, will be touching on that. The impact of that on destroying people's homes, infrastructure such as roads and bridges, but also infrastructure like hospitals and schools. Is absolutely critical to take into account. So the impact of climate change really touches on every aspect of life and goes very, very far beyond merely, when I say merely, that is already a big protection gap, but let's say agricultural insurance. So I think this is a message that we really want to convey. Then we have to address the challenges with modeling data. So in a situation where historical series are available, time series, that is helpful. In these days of uncertainty and rapid change, it's also not enough. So I think that there are some exciting evolutions on the modeling front to take this into account. And I suspect that we'll be hearing more about this from some of our speakers. And then let's think about data that is pushed out to farmers. So advisory services, when to plant, what to plant, in cities, warning people, early warning systems for when adverse weather conditions are going to be happening. This can be easily done, technologically speaking, using mobile phone networks. The question is it being done, and is it being done enough with backup emergency systems in place? Coming back to agriculture, what about yields? Do we have enough information about yields? Do we have enough information about prices? Because ultimately, when we look at ensuring crops and yields, we're looking at two different things. One is the income support for the farming households, but the other is at a national and even international level, food security, a crisis that we know the world is currently facing for different reasons, not only related to the climate. Then we need data about the actual impact of losses, and that impact of losses that actually happen and how those are played out. When they're triggered by an index, that's great. We know about basis risk, we know that that exists, and we also know that there are approaches to mitigate the basis risk that exists with index-based insurance. But I'd like to talk about another protection gap, and that is the people protection gap. Because very often in insurance, we're not sufficiently customer-centric. We don't go to our customers to understand the kinds of risks that matter to them, what their current coping strategies are, and how those could be complemented by taking more of an insurance approach and transferring some of that risk to insurers and also to national governments. So we need to understand more about customers, and we need to understand about the customer segments. And then we need data to measure the progress. So we're very proud of our landscape report. I'm nearly done, Alexander. Very proud of our landscape report that we're carrying out in a number of Asian countries this year to identify how many low-income households are covered for different types of risks. So in conclusion, I'd like to encourage the concept of iterative data collection, both from the risk side, but also from the people side, because I do believe that such an iterative loop where we create feedback, ongoing constant feedback, can really drive scale. With that, I'll close, and back to you, Alexander.
Thank you so much, Katharina. Thank you so much, Hannah, for this excellent framing and highlighting the urgency of the topics and pinpointing very important points. So after these very relevant remarks, we want now to steer things up a little bit with a slight poll, kindly facilitated by our Min colleague Asier. So you find now, actually, we'll only do 2 questions. Don't worry. The first question is a bit more personal and humorous, so we get used to to how things work out. The first question is: if you were an insurance product, which one would you be? Now, in your chat function, you will find a link that leads you to a very simple Slido site where you please enter your kind of personal insurance product identity. And I think I see after some time, you will share the results with us. It's coming up, as I can see. Somebody seems to be more concerned with his funeral, but most that we see are actually on health, hospital cash, income loss. Here we go. Very good. We have 14 answers. Some space to go. I hope everybody can open the link and enter his or her opinion. Good. Okay. I think the test kind of worked out. We had until recently a focus on health and hospital cash, which is quite common, no? We know that also from going into the fields. If we ask people what is your biggest problem, health, it is. No? Health really is an issue. So your identity as health insurance person is quite accurate, and we come up with agriculture here. More and more now, we have 22 answers. Good. Thank you, everybody, for participating in this initial question. So now we are kind of familiar with the technology. Asier, I would suggest that we move to our main question. And the main question is, why is today's insurance not good enough for the climate protection gap? And here I would like to encourage you to take 1 or 2 minutes to really think about it, because this is not a trivial question. And please phrase your answer only in keywords. So please not more than 2 to 3 words. Otherwise, the word cloud doesn't work anymore. And as he already kindly provided the second link. So please open this link and give it a thought, what you think are actually the biggest hurdle in the challenge to provide affordable and adequate insurance coverage. Good, good. Very interesting. So everybody starts putting in ideas. So we intentionally don't show the results right away, even though I guess you can see it. Maybe because no, you might be influenced by what you are seeing, but I see maybe you can now change also, show also the results for this question. That is very interesting. Cover not enough. So I'm curious what is behind cover not enough. So meaning the products don't cover enough perils, I suppose, or not the right perils. If anybody who wrote this would want to give it a try, give it a comment, feel free. Other than that, we have very common points such as awareness. Isn't there not insufficient knowledge? Top to down, supply driven, also very interesting. Yeah. But also then loss, damage, and data. No, so data, the topic of today, is also there. Okay. Thank you very much for giving this a thought. Also, please feel free to comment on the results in the chat. What do you think was most important? However, we'll now dive actually into our first plenary session, which is titled "A Change That Needs to Come." The session will kindly be moderated by Lorenzo Chan. Lorenzo Chan is the president and CEO of Pioneer Life and the retail organization digital transformation head of the Pioneer Group in the Philippines. Pioneer here is a leading insurance institution spearheading the massive success of microinsurance that happened in the last years. Lorenzo is currently also the chairman of the board of the Microinsurance Network. Lorenzo, thanks very much for taking the lead. The floor is yours.
Thank you, Alexander. And yeah, so I'm just going to go right straight to it in the interest of time. And so we have three excellent panelists that will talk about the change that needs to come. And I'll start off by introducing each and then letting them, giving them 5 minutes to share some of their initial thoughts with the group. So our first panelist is Jaime de Pinies, Jaime is the CEO of Blue Marble. And before this, he was the head of Africa and APAC for the company. Jaime has worked as a development practitioner and researcher in access to finance projects across Africa for different organizations such as USAID, DCA, and the UNSDSN. At TechnoServe, he developed a strategic plan to access to finance for agriculture SMEs in Zimbabwe for the EU. And prior to this, Jaime worked at GE Capital, General Electric Bank, where he completed the financial management program. I could go on and on about Jaime, but in the interest of time, Jaime, this is your 5 minutes. Take it away.
Wonderful. Thank you so much, Lorenzo. So I'm going to share my screen and give you just a little overview about Blue Marble. Let me know if you can see it.
No, it's yet to come up.
I can see mine now.
Now, yeah.
Now you can? Okay. Well, thank you, Lorenzo, for the introduction, and hi, everyone. So I'm just going to give a brief introduction about Blue Marble. We are an impact insurtech with a very focused mission to provide access to insurance to financially underserved individuals. That's the reason why impact is in the way I described the company, but we're also an insurtech in that we are providing technology solutions to enable access to individuals to this service overall. We work with different partners across the world. I've included here a few: Nespresso, WFP, IFAT. And it's important also to note that we are owned by a number of insurance industry leaders that provide guidance, talent, and risk capacity. You have here their names. And it's also important to note that this doesn't mean we don't work with other companies. We work with everyone, but these companies do really help us in providing that expertise needed to advance the barriers of the industry, the frontier of the industry, sorry. We work in different continents. So we work in LATAM, Africa, and Asia. And I would like to mention our work in Indonesia. We're working with IFAT and the Ministry of Agriculture. We're trying to advance access to tree crops, insurance for tree crops in this case. In terms of our services, so going up here, we set up climate insurance solutions, and we are trying to enable the creation of these solutions. So there's many things that go into creating these solutions, as you all know. It's very challenging. So this may sometimes be structuring, having project and stakeholder management. Sometimes it's enabling access to risk capital. Other times it's creating products. Other times it's creating solutions that provide good processes, so there's a good customer experience. So we try to enter wherever there's a need. And if there's nothing, then we can certainly help put together a solution. And in terms of solutions that we provide specifically, so we're working fundamentally with parametric products. We cover different risks, such as drought, excess rainfall, heat, humidity, temperature, and others. Work with different types of crops and different distribution models. And underpinning all of this, we have a platform that helps us provide these services. And so I'll stop there about ourselves. I'm very keen to, in the session, provide more insights about what we do and how can we help steer this dialogue as well. Thank you.
All right, thank you, Jaime. Our second panelist is Anush Kumbat, who is the co-founder and CEO of Weather Risk Management Services, PVT Limited. He is a chartered accountant, company secretary, and a member of the Global Association of Risk Professionals, the GARP. Anush has over 21 years of experience in climate and financial risk management. And in WRMS, he is responsible for building and managing the portfolio of clients who require innovative weather and agriculture risk management solutions. He played a key role in the development of SecuFarm, which is one of WRMS's most comprehensive offerings. And he's likewise conceptualized and implemented several exceptional index insurance initiatives. Anush, your turn now.
Thanks a lot. Thanks, Lorenzo. And thank you everyone for inviting me on in this forum. Am I audible?
Yes, we can hear you.
It's a pleasure to be speaking in this forum. I'll give you a brief overview of WRMS and the work which we have done in this space of parametric insurance and bridging the climate risk gap with some of the examples which we've worked in. WRMS as a company started a solution being offered globally in India when the farmers in Andhra Pradesh were offered index insurance cover. That was the genesis of the company. We believe that the solution can be taken to large number of smallholder farmers and then can be offered to farmers who have not been getting a proper insurance solution for managing crop risk. So that was the initiation of our journey in climate risk space, and we over a period of time also added not just a software solution or applications or platforms, but have also started a completely owned subsidiary for manufacturing and installing low-cost automatic weather stations. And these have also helped us in putting a network of stations and developing better data sets in India and in some other countries like Bangladesh. Now, in terms of the work which we've done, apart from working in India in developing both crop and agriculture insurance market, wherein in India, close to 25 million farmers are accessing crop insurance and agriculture insurance, and we have been part of development of these projects, government and with insurance companies. Have supported almost all insurance companies in India in developing parametric insurance models and actually adding a lot of value chain systems in. So we did a bundled crop insurance or parametric insurance solution with agri input value chain, wherein the premiums were paid by the agri input company, and this was piloted way back in 2005. And we have done several such programs since then. We have also bundled parametric insurance solution with agri output value chain like PepsiCo, like country farming companies in potato, barley, wheat, and rice ecosystem. The whole idea was that the burden of climate protection gap and the risk should not be only taken by the farmers, and there are opportunities or risks which are associated with other agri value chain player, and what are the ways that this cost can be shared. So these bundling helped us in actually doing the cost sharing and also providing a key risk reduction technologies which are required to manage the farmer risk. Apart from that, we started first parametric or flood index insurance in Bangladesh, also started parametric insurance solution with Forte Insurance in Cambodia for the first time when we covered, we actually bundled the offering or offered this product with MFI loan in Cambodia. Have recently been associated with yield-based or area yield index insurance solutions in Indonesia, where we are working with a government insurance company, and also offered the first parametric insurance solution in Pacific Island countries for micro borrowers, and also for crop covering key crops in Fiji Island. What is basically the common thread in all these areas is many of these locations, the exposure and vulnerability data sets were not good enough. There was also in some cases not enough parametric weather data. So in a lot of these locations, we've used model data sets and have kind of triangulated with other data sets like vegetation indices, NDVI or flood indices to generate enough information on exposure and vulnerability of these communities. And that's how, and the key message here is also that how the demand side partners or supply side partners are integrated on the solution, and how the solution can make the immediate or quick payments. And that's how in Fiji, for example, we are working in climate space offering hurricane or cyclone insurance specifically for livelihoods related to agriculture and fisheries. Again, the whole idea is that the payment has to happen very fast, and that's how the integrated technology, which is a platform which was offered through insurance company, wherein our platform of product design and data management and claims calculation was integrated with insurance company's platform on policy booking and claim settlement. So that's how the solution was quickly delivered to the farmers. I would stop here. Would be happy to answer questions.
Well, thank you, Anuj. Thank you. And our third panelist is Suranit Chit. He is the Deputy Director of the Financial Development and Innovation at Bank Negara, Malaysia. And he began his career with Bank Negara in 2007. And prior to joining the current department, he was a Deputy Director in the Insurance Development Department up until early this year. Suranit oversees the formulation of strategic plans and policies to advance the development of the Malaysian insurance sector. These include initiatives to shape the industry's landscape and promote robust market infrastructure to support the growth of a progressive, inclusive, and resilient financial sector. He drives initiatives to promote greater insurance access and penetration among the underserved segments through microinsurance and Takaful initiatives. Suranit, the floor is yours.
Well, thank you, Lorenzo. Very good day to all. And it's indeed a pleasure to be here. Perhaps maybe just to kickstart, a little bit of background of Bank Negara Malaysia here in the context of an insurance regulation. So perhaps maybe just putting in the context that at the heart of a very well-functioning economies and efficient financial sector, there must be inclusive, right? Effectively, this means that every player in the financial sector must be able to meet the financial needs of the different segments of the economy, be it for savings, financing, or risk management for the economy to function sustainably. Within the context of Malaysia, I think to some extent, Malaysia has been relatively lucky in the sense that over the past several decades, we have been rather insulated by some of the more natural catastrophic events that has affected some of the other countries within the region. However, as climate change and the impact of it, manifests itself, the weather-related disasters become more erratic and frequent, thus necessitating more coordinated effort in terms of the various stakeholders involved. At the Bank Negara Malaysia, perhaps today, I will touch a little bit in terms of the efforts that the Bank Negara is actually undertaking in terms of fostering a little bit more of the knowledge on climate risk management. Secondly, is in terms of integrating the climate risk into the institutional level, industry level, as well as the national plans. And thirdly, it's about the work that the Bank Negara is actually working with the industry in terms of supporting the availability of data provision about climate risk practitioners. As some of you may be aware, the Bank Negara Malaysia, as well as the Securities Commission of Malaysia, has established a joint commission on climate change in 2019 to draft efforts in terms of addressing some of the more pressing issues relating to addressing climate change events in Malaysia. Also, I'd like to touch upon that in the recent financial sector blueprint, we have actually set out that one of the key agenda items for the country is actually in terms of positioning the financial system to facilitate an orderly transition to green economy. And this, among others, involve the improving availability, access, and use of data for tackling climate change and environmental degradation. Among others, we are open to facilitating the application of advanced digital tools to address the needs of the financial sector for more accurate, granular, and location-specific data to support climate risk mitigation and adaptation use cases. I'll pause here for now, Lorenzo. So over back to you, Lorenzo.
Right. Well, thanks, Suranit. I'm going to just get the ball rolling by asking some questions, and I'll pose the first one to you, Suranit, because you've explained part of my intro of yourself is what you do at Bank Negara, and you've explained, talk about the green economy, etc. But I'd like to zero in and ask you, what is the role, if someone had to ask you, and in a couple of sentences, what is the role of the insurance regulator in closing the climate protection gap?
Well, Lorenzo, I think as we have seen over the last several decades, right, climate change is disruptive. It could unroll decades of economic progress through interruptions to economic activities and the huge consequential losses that severely impact livelihood. If you think about it, climate change is a paradox of sort, right? While the impact can be deemed as a great equalizer in the sense that no one, regardless of wealth and status in the society, is spared, the impact of climate change, on the other hand, is very likely to deepen inequality, given the different degree of coping mechanism of the various segments of the society to deal with the consequences. And this is most evident in developing and emerging economies. Perhaps maybe I could just cite an example of a report that the Insure Resilience Global Partnership presented, that less than 1% of the losses due to natural catastrophes in some of the most populous nations in the world, which are also most exposed to climate risk, are covered by insurance. This means that there is a significant underinsurance in some of the most populous nations, and this highlights that in terms of the coping mechanism for the lower income groups is rather limited to perhaps maybe own savings and government assistance. Thus, I think in terms of just going back to your question, what would be the role of insurers in this sense. And I think Hannah has also touched upon it in her opening remarks. I would categorize it into two terms. First, the role is actually supporting a multi-tiered climate and disaster risk financing strategy. And the second is actually on climate risk mitigation. So on the first part, in terms of the supporting multi-tiered climate and disaster risk financing, at the micro level, this is actually important to support the livelihood and resilience of poor households and MSMEs. The claims payout will assist lower income groups in economic activities most impacted by weather events such as farmers or activities that relates to natural resources such as tourism related, right? To cope with income shock, which would avoid them from spiraling into severe economic hardships and indebtedness. Indirectly, this financial assistance through the claims payout could also reduce the impact at the meso level. In this sense, it's the loss of employment and livelihoods, as well as interruptions to business and supply chains. At the macro level, I think this will also reduce fiscal burden. The Insurer Resilience Report also estimated that about for example, a 1% increase in insurance penetration, it will actually reduce this disaster recovery burden on taxpayers by 22%. So on the second role, for insurers, is actually in a position to assist in climate risk mitigation. This includes provision of climate risk mitigation and adaptation measures through the insurer's own risk management plans, such as weather alerts to its insured, or community-based projects to enhance flood barriers. So additionally, insurers, particularly reinsurers, have a wealth of data that will be beneficial in predicting the extent of financial losses arising from climate risk. Lorenzo.
I just have a quick follow-up to you, Suranit, and Anush, and then Jaime can chime in as well. Yes, it is clear that based on the data that you have, if more people had access to insurance properly, etc., it would really reduce the loss to life and income and GDP and all that. We all know that logically, but why aren't more people getting insurance? I mean, Catherine Pulveraker talked about this. She says, there's still all these human lives, not having access to it or not taking it up. Why?
Right. I think, Lorenzo, maybe at the top of my head, like I've given the context of Malaysia, for instance, right? Historically, I think one of the issues is that, erratic or these catastrophic weather events is not very frequent in Malaysia, but we have seen an increase of sort over the last several years. So number one, I think is in terms of complacency, in terms of the level of priority for people to subscribe to insurance is rather low. Second, I would believe that because of strong governmental support, there is lack of impetus for the low income groups to actually subscribe to insurance. And this has actually added to the burden of the government. And thirdly, I think in terms from the supply side, perhaps there's a bit of limited data, particularly in terms of the impact of losses, predictability of the severity of climate risk. And this has actually impacted in terms of the provision of some of the products in the market. So I think broadly, those will be some of the reasons why the low take of insurance in some of the low income or emerging.
Thank you, Surani. Now, Anush, do you agree with that? And Surani, correct me if I'm wrong. A reliable government who you can count upon in times of need is sometimes contributory to the lack of preparedness of the population. Do you agree?
Yeah, I would say that's a case also in India, primarily because government in most cases are funding a lot of these disasters and there isn't proper risk layering. And in India, both provincial government and government of the country are actually contributing in payments in case of disaster. And when I'm saying risk layering, even those risks which should fundamentally be reinsurable or insurable are taken care by the government in some cases, and that is causing most of the insured or potential beneficiaries to think that they do not need protection. I think there are other issues as well related to affordability of the solution and outreach mechanism. And I can give you some examples in India, for example. When MFI loans are offered, life insurance or credit life is usually bundled because it's cheap and it's easy to offer with the solution. And even MFIs are able to directly correlate the loss of life with not getting repaid on their loans. So for them also it becomes a necessary. But when you start talking to them about covering climate protection or providing climate protection or covering that gap use as part of the loan portfolio, most of the MFIs are finding it difficult to do it, again, primarily because of the costs which are associated with this. And they are not willing to bet on reducing the interest rate on with this protection gap. So, I mean, there are probably not enough proof of concept because of which they are not reducing the interest rate in spite of climate protection being in place. And that's the reason the whole cost of credit as well as insurance becomes very expensive for to deliver. One case where we have actually tried and address this problem was to actually, rather than covering the whole credit, we worked with beneficiary, and GIZ also supported this initiative in terms of design and development and implementation, is to cover the EMIs rather than covering the whole loan, so that the burden of premium goes down. So we are covering about 3 to 4 EMIs. That is one of the solutions to make it more affordable and improve the outreach and bundle it with the microcredit. But I think the whole idea is not just the beneficiary awareness, it's a whole value chain awareness which is required. Plus, government also needs to understand that what risk they should keep and what risk they are supposed to pay for, and what should be insured and managed through insurance market.
Well, thank you. Jaime, is it not a chicken and egg situation? I mean, if you have access to insurance, then you would not have to wait for rollouts. But, I mean, but why take out insurance if the government's going to give it to you anyway? Is it not a chicken or egg situation? What do you say? Oh, unmute, please.
I was double muted. Yes, it is a chicken and egg situation, and indeed, we do see this situation of, I guess, incentives developing such that the actual demand for insurance is diminished. And I think there's, if we take sort of like a broad view of all the roadblocks that are on the way to provide that effective access, certainly one can be these incentives that are created. But I think there's a need to sort of start from somewhere, and actually address the problem and forming partnerships, structuring programs in such a way that you can deal little by little with each of these roadblocks is fundamental. At least in our experience, for example, with the work we're doing in coffee insurance, we look at the whole value chain and we understand, okay, how can we actually uncover potential opportunities to, for example, fund that premium, so that that initial, say, barrier of entry to a first-time consumer to having to pay for the insurance, which seems unsurmountable in most instances, at least you can find other pockets that may not necessarily be public funding, but it could be a bundle of these sources of funding, and finding innovations in that regard can really help at least get started. And then once that service is being consumed, that experience is being developed, if you focus on providing a good value experience, focusing not just on product, but also on processes, communications, education, ensuring that the end consumer is actually not just aware, but it's actually enjoying the experience of being insured. And eventually when they do get claims, they actually get them paid on time. Then actually you're setting things up in a way that you can boost demand and work as a system, right, in tackling this issue. So I think indeed it's a challenge, but I think there's ways to at least try to solve this incredibly challenging problem.
I want to do a follow-up. Now, I mean, you see a lot of different products that are floating about in the market. What areas of innovation or new product or service offerings, especially in the inclusive sector, excite you? I mean, are there any that you see around you that most excite you? And if you, you're probably going to tell me the Nespresso experience, but otherwise, go ahead.
No. I mean, I'll talk about probably in 3 areas. So one is on processes. I see a lot of innovation in digitizing value chains, right? And I think this theme at large has been talked a lot about, but there's a lot of really promising innovations that are coming up, enabling actually much faster payouts, enabling smoothing the registration of customers. All of this just makes the overall customer experience easier and enables access to populations that traditionally haven't had access. So I think despite it being an innovation for quite a long time, I see traction and we have concrete examples where this is happening. We're driving a project in Zambia, for example, where we're doing this, and we see a lot of potential in this space. In products, there's a lot of potential as well. There's high resolution data sets that are emerging. They have short time series, but they're progressively starting to inform products. That opens up an opportunity to reduce basis risk through more granular data. There's other ways to tackle risk, for example, ex ante, not just ex post approaches with forecasting data sets. That's an interesting area. We talked before about price insurance and yield insurance, maybe thinking about revenue insurance, combining those two and thinking of the overall revenue of a farmer and of an SME, for example, as the way to ensure these risks. And then in sort of structuring and, if you will, more how to finance these things, I see a lot of opportunities to form PPPs and not just have, say, always ask governments to fund so for the premiums, but also have the private sector contribute and de-risk as well, and finding innovative ways, for example, to structure with international reinsurance programs where the ultimate access to the individual is done effectively and with entities that are thinking strategically in the long run. So I see innovation across all these aspects, certainly.
You mentioned data, and so I want to pose this question to Suranit. There has been a lot of talk about data, and that is one of the key words of our session today. So it's data gathering, analytics, processing. I may have talked about forecasts, revenue, et cetera, et cetera. Are you able, Suranit, to share with us an initiative or two where the Bank Negara Malaysia has or is undertaking to bridge some of the data gaps that our industry faces? And what more can be done?
Yeah, thanks, Lorenzo. I think I accidentally switched off my video, but I guess going back to your question, I mean, just recently, the Joint Committee on Climate Change, JC3, has published a report that says that, from the financial institutions surveyed, 96% of them finds that, there's poor data quality or availability for them to be able to structure sustainable solutions. So basing on that, I think for Bank Negara, one of the measures that we are embarking currently is actually in terms of galvanizing the commitment from the private as well as the public sector to work together to develop appropriate mechanisms to facilitate availability and accessibility of data at a cost and time efficient manner. So what this means is actually, pulling together all the resources that we have, be it from the public or private sector. And this has been, one of the key drivers for the subcommittee under the JC3 to look into the recommendations or mechanism or solutions towards this to address the gaps in data, right? So this work involves identifying the critical data and their resources, as well as exploring measures to bridge data gaps. Some of the key initiatives, if I can just quickly touch upon, will be the, talking to key stakeholders in terms of what would be the data needs for them to be able to, structure more solutions. Secondly, will be, how can we actually adopt emerging technologies such as big data, artificial intelligence, or machine learning to process missing climate data through the hidden patterns in terms of the missing data points. And thirdly is on, subsequent to that, establishing a climate data catalog for the financial sector, which will serve as a point of reference for financial institutions. So broadly, I think, Lorenzo, just going back to your question, these are some of the initiatives that Bangladesh as well as the industry is currently embarking in terms of trying to bridge the gap in terms of data availability.
So Rani, are you getting full cooperation from the industry, or are you getting pushbacks?
That's a good question, Lorenzo. I think from the partnerships that we have formed under JC3, they were very cooperative. They were supportive, and in fact, from a survey that from the report that has been published, also a lot of them have actually embedded, climate risk mitigation as well as a framework in terms of the business plan. So they are on board, and they are actually looking into how they can actually advance this agenda further.
Okay, now quickly back to Anuj. At Weather Risk Management, you work with you leverage with a lot of data and onto. Can you give us an example of how data was leveraged effectively, which contributed to, say, a risk management solution that served you well?
Sure. I would give you two examples where we recently worked. One is Haiti. It's a Caribbean country where getting data on yields or production, as well as the climate data or surface observation data, as we call it, weather station data, is very difficult. All the data sets which you've got were not sufficient or had large amount of data gaps. So the critical problem for us was not just to identify the right source of data, but also to identify to get the data sets to set the triggers and attach the triggers or set the exposure or understand the exposure and vulnerability of the low-income community. And we're talking specifically in the farming system, we're talking about agriculture. So what we did is that we actually started using multiple data points, including precipitation data sets from various sources like CHOPS, ERA5, or GPM, analyze these data sets, but also used a lot of vegetation indices and vegetation health indices to triangulate and understand when the events are happening, what are the severity of the events, and how are they playing out on in terms of agriculture productivity, since there was no production data sets available otherwise. And also we have used this precipitation data sets along with a lot of hurricane information which we've got to understand the excess rainfall events or flooding events and try and correlate such events with triggers. So this was a challenge where the field data sets or the data sets on ground were not easily available. And we've used a lot of modeled outputs as of various granularity to understand what should be the trigger and what should be the payout for each of those triggers. And now we are in the process of validating those assumptions using primary data collection, which is where getting information from the field or from the farmers is concerned, to validate what we have taken as an assumption or product triggers. And this is where we are kind of harnessing the data as well as the information which we're getting and trying to set a product which can work for the low-income farmers in Haiti. This is one example. Secondly, we have used a lot of highly granular remote sense data like Sentinel-2, which is a 10-meter resolution data, to downscale the risk management solution to farm level for smallholder farmers in India. And this is possible by actually, it is very difficult to offer a parametric solution at a farm level, small farm, when I'm talking about 1 hectare farm. So what we did is that we integrated a lot of risk reduction technologies for monitoring and use these data sets for monitoring agriculture activity, including irrigation or pest and disease management, and kind of converged agriculture technology or agriculture advisory services or risk reduction technology with risk transfer technology and offered a yield guarantee or yield assurance solutions to the farmers. And this is another use of data where we have, since we didn't have long time series of these data sets to design a farm level complete protection, we've used this for risk reduction and bundle the risk transfer mechanism along with it. So these are a couple of examples where data has been used for offering an innovative solution to the farmer.
And it's just a quick follow through. When you develop these initiatives, naturally you need to get these tested and roll them out. Is it a challenge to find willing um, willing guinea pigs, whether it's an insurance company or it is a market up there of farmers? Is it, you know, why should I be tested? You know, why me? Is it a difficult, is it a challenge to get people on board to test it? Or are they all excited?
In the countries where the programs are multilateral driven or donor driven, obviously there's some bit of payments or subsidies which are offered where the bundling is happening. But when we're working directly with the farmers, of course, we need to explain a lot of these things to farmers. And our primary initiative here is primarily what we do is that we work with the value chain players like agri input company or agro processing in the companies and explain them the solution and bring them on board. So as a value proposition for the farmer, it becomes far more attractive because they are getting the upside and also getting the downside risk protection. So if I may put it this way, probably if I had gone directly to the farmer, it would have been difficult for us to really offer these kind of solutions to the farmers. Since a lot of these are test solutions or pilot solutions. But when you explain this to a value chain player and bundle the other services which these value chain players are offering or getting, for example, offtake guarantee for the produce by contract farming entities or better technology for production, this helps in overall solution development, which includes, as I said earlier, how the productivity enhancement can happen using solutions which are given by this contract farming entities, and how the risk reduction and risk transfer can happen by the solutions which we have designed. So that's how we try and circumvent the challenges to farmers in isolation, or testing or making them guinea pigs for it.
Okay, thank you. And then I understand we have very little time left, but I don't want to end without asking Jaime this question that I've been raring to ask. Now, I think Blue Marble is also in tech, you know, as a tech company and all these bits, and they work with digitization. Jaime, how does one roll out digitization? We you know, a lot of people think digitization is a necessity these days to upscale, you know, to grow volume. How does one effectively roll out digitization or apply tech in markets where the market is not digitally savvy or comfortable with tech, or where the situation is really aggravated by poor connectivity and other external issues? There. Unmute, please.
Sorry, my computer keeps on double muting me. Yes, so let me go really quick on this, but the same way you have a customer-centric design approach to a product, you need to have it for process, you need to have it for the rollout of a technology. So as you clearly say, if the audience, if the public, if the population you're addressing doesn't have technology awareness, doesn't use, say, phone terminals, whether they're smartphones or feature phones, they don't have access, for example, to mobile money solutions, then that solution needs to be adapted. So it's fundamental to whatever gets designed has the customer first, understand what the inventory is of their currently technology access, what's actually doable. So once that's understood, then that solution needs to be designed in response to that need. So if you're in a country, for example, like we looked at this in Mozambique, where access to mobile money is quite limited in rural areas, then we need to roll out, for example, maybe an agent-led model where agents have the terminals. They're the ones that are providing the registrations. They're the ones that are really an intermediary and help as an initial state to roll out a technology solution in a phased approach. Whereas in other environments like Zambia, where we found mobile money to be quite widespread, you can directly integrate to value-added service providers, and we have APIs that they can consume, and therefore channel data as well as funds directly to the user terminal. So it really depends on what is that population, and there's different ways to address the need and customize it. And it's fundamental to approach in that way, as we believe.
Well, thank you, Jaime, and gentlemen. I mean, it's been wonderful. I've thoroughly enjoyed the session. I hope you have too, and I hope as the rest of our attendees and audience. I was originally going to give you each a minute to say goodbye, but I think in the interest of time, I shall not. I reckon that you all have said a lot, enough for us to take away. So deepest thanks to you, Jaime, Suranit, and Anush. Wonderful session, and thank you very much for the insights you've shared with us. Back to you, Alexander.
Thank you, everyone, so much for myself as well. It was very, very interesting. I was keep taking notes, and thank you very much, Lorenzo, for the great moderation. We will now then start with the next session, which is on building the right data blocks. The moderator of the session will be Dr. Niha Yangle, a colleague of mine who is not only a brilliant mathematician, but also very versed by now in different types of insurance solution in multiple contexts. He spent many years in India for trying to set up products there, and now I think since 2016, Niha, you joined GIZ and you support greatly our team. Thanks very much for that, and thanks very much for being the moderator of the session.
Thanks, Alexander, for your kind introduction. So yeah, let me start right away. I'm very keen to moderate this session and have these distinguished speakers. So we heard the word data quite a couple of times, so it's not new if I would tell you, right, that the insurance industry is data-driven, and it has always been data-driven. And it is true for the traditional insurance industry, and it is true when we consider countries or segments of the population which are underserved, where we are considering here the climate protection gap. So new data, new risk analytics, and digitalization from artificial intelligence, big data, and blockchain are really transforming the industry. So the types of data which are relevant have been mentioned by Catherine and by Hannah. And it is the traditional type of data, exposure data, hazard data, demographic data, population data, yield data, or loss data in more general. But there are also the less traditional data or new types of data which were not available a couple of years back, like Internet of Things data, social media, or online media data, which can be and will be more and more used for insurance. And it has also been stressed by Catherine, the data is not only there for designing better insurance products or pricing or improving insurance processes, but it is also important to use them in M&E frameworks, in doing impact assessments, and eventually also to design more people-centric solutions to increase the value for people. And the challenges have also been discussed, that particularly in emerging countries or developing countries, there are data gaps, right? Particularly when it comes to climate data and other data. And we need to close these data gaps to design adequate value for money solutions. We have also seen that we have new types of actors, insurtechs. And there are different types of insurtechs, like Blue Marble kind of insurtechs. There are other insurtechs that rely on new data available or new risk analysis. So they are in a very niche position to offer certain services to the insurance industry. And this really makes a big change. And in general, I would say, and it has been also stressed, there are also quite a few of new challenges arising from these new actors, but from the new types of data and the way we can deal with data. There's the risk that we exclude certain people. There are the risks that bad risks are excluded, people, communities, or countries. And there's also the question how we appropriately use personal customer data. But overall, there's quite a huge and growing potential how data can improve the existing insurance solution offerings to people who are currently unserved. So with these few words, I would like to hand over to Hui Lin, but let me give first an introduction. So Hui Lin is the project lead at EtherRisk and responsible or driving the decentralized insurance projects in Asia and Africa. She has over 10 years of experience in the financial sector regulations and policy, specializing on inclusive insurance markets. And prior to working with EtherRisk, So rather recently, she was with Access to Insurance Initiative hosted as GLZ, and therefore also a dear colleague of mine. And there she worked on developing learning tools, training programs, and she did research on insurance regulators and regulation in emerging markets. And she started off at the Malaysian Central Bank and insurance regulator. So Hui Lin, over to you for your presentation.
Thanks very much, Niha, for the kind introduction. I'm just going to share my screen and I hope it works well. Great. Good. So hi, everyone. As Niha said, I'm Hui Lin. I'm the newly minted project lead at Etherisk, and I'm very happy to be here. So a quick introduction, Etherisk is a tech company, and we developed a decentralized insurance platform on blockchain. And with our flight delay cover in 2017, we are the first ever team to deliver insurance solutions on the blockchain. And we strongly believe in the potential of decentralized finance and decentralized insurance to support inclusion and financial resilience goals. So this platform has allowed us to automate weather index insurance from end to end using smart contracts built on the blockchain. And today I'd like to give an example of such a product and how sort of the data works behind the scenes. So on this slide, you're seeing an insurance, index insurance product that we worked on with Acre Africa in Kenya. It's called the Bima Pima product, and it was an existing product by Acre Africa. It covers farmers against basically too much or too little rain. It's available to any farmer through seed distributors and village champions, and pricing starts from 50 cents, set at 10% of the sum insured, which is decided based on the replanting costs. So it's basically kind of a replanting guarantee. And how would this product or a similar product works from the point of view of the customer's shoes? So firstly, the farmer buys the seed bag with an insurance scratch card included. Now on this card, there would typically be a code that the farmer can type in via USSD. This then activates the policy. The farmer then enters their mobile money PIN and receives a confirmation. For a limited time, they can top up if they wish, but otherwise the farmer just goes about the daily business, with the planting season. Along the way, they will receive a weekly SMS weather update. And if they have a query, they can simply use the USSD menu. Now, if a drought hits, payout is then automatically received within 1 week without need for claims initiation from the farmer. And a key benefit of such a short turnaround time is that farmers can also be paid within the season. So this means they can be paid early enough to use the money to replant rather than to only receive the money at the end of the season. And for this sort of experience to be developed, to be delivered to the customer, there are different roles that need to fit together. So strong partnerships are actually really important to us here. Ideally, we need an on-ground implementer to lead the product design, to provide the strong distribution networks and relationships on the ground, and maybe handle farmer interaction. Where we come in is at the tech platform. So we develop the blockchain and the smart contracts, which is basically the main parts that executes the insurance processes. But then, of course, to connect the blockchain platform to the farmer, you need something which is the user interface. And then to connect the blockchain to the weather data, you need what is called the Oracle. It's a really nice name. And oracles are basically specialized companies that sort of provide this service of connecting what we call on-chain and off-chain data. And an example of a company is Chainlink, for example. And then on the right, you have the risk pool. And today, this can technically be an insurer. We can basically sort of plug in this whole system to sort of traditional systems today. But in future, we are working towards leveraging crypto-based risk pools that are built on the blockchain. So now this is sort of the point of the presentation. So data-wise, there are sort of three main areas where I've highlighted in different colors where you sort of need data ingredients. So pricing, underwriting or onboarding, and claims. So for pricing, you need the data that goes into the pricing model. I think other speakers have spoken quite intensively about this. So this can be rainfall, yield data, crop growth, soil moisture, whatever is available in the country that you're working with. Now this is turned into pricing tables saying, for a given premium amount of X, if rainfall data shows Y, then Z amount of sum insured is paid out. Now, these conditions are pre-programmed into the smart contract, or what we call the contract review engine that you see on the screen. Secondly, you have the underwriting and onboarding. So when farmers activate the policy, data such as their mobile number, their geolocation, time of activation, and premiums are automatically captured via the USS team. And then the final piece of the puzzle is the claims, of course. So the main thing that we really need here is really the satellite rainfall data. So when rainfall goes above or below a certain threshold, meaning it meets the conditions that were already pre-programmed into the smart contract automatically executes the payout to the relevant mobile wallet. Now, maybe just sort of not dive into detail on this diagram here, but a key point that I wanted to highlight here, and this is what makes blockchain different, is that as you move along these different stages, information is actually notarized on the blockchain. And what notarized means is that the policy information is recorded on the blockchain in a protected way, such that it cannot be changed and disputed. So that's what it essentially means. And this significantly lowers the chances of fraud, so the insurer can trust the farmer more. It reduces the chances of abuse and conflict of interest, so also trust from the farmer to the insurer, reduces the chance of basically human error, therefore helping to address the issue of trust. You can have a closer look at the diagram later, but basically where you see the black dots, that highlights the points at which this notarization occurs. So I know I've kind of sped through the presentation, but basically to sum up a few takeaways here. So firstly, honestly, for a blockchain-enabled weather index insurance solution, we need the same data for any other weather index solution, and we face the same data challenges and data realities. So for claims, what we really need at a minimum is real-time weather data, which today, at least satellite data is easily available at relatively good resolution. We also need data for robust pricing models, which we find is often the main block. I think Anuj also spoke a little about this, and often in emerging market, yield data is patchy and incomplete. Now to move to the right of the slide. So now blockchain technology adds 3 key points of value here, right? So firstly, cost and customer value, better, faster onboarding and claims experience, and transparency. But ultimately, how good products are in meeting needs, in matching the income losses of the farmer, really depends on good pricing data and good pricing models. So I hope this gives you a good idea of our experience, and we would love to hear reactions from everyone. So thank you, and back to you, Neha.
Thank you so much, Huilin, for the great presentation. And I would encourage everyone to put your questions into the Q&A. And there is actually right now a question, which I will ask you in a second, but I also have a question. And one question I have would be, Huilin, well, excuse me if I have only like a basic understanding of blockchain, but I have some experience with it. So blockchains can help you, right? Like you said, help in resolving transparency issues. But I would be liking to know, I mean, like you said, you still have data challenges, but I would like to know what are the specific unique data challenges you face when setting up your blockchain platform, because you still have to feed in the data and then it's kind of secure. So what are the unique challenges you face with your data blockchain platform? Yeah.
So to be honest, in terms of the data sets we need, it's really actually the same as sort of normal, like, non-blockchain weather index insurance. And in terms of the data formats and things, it's quite easy to work with that as well. So that's not really a challenge for us. But I think the challenge for us is to make sure that the way we design the data infrastructure, it upholds the benefits and the principles of blockchain as well. So what I mean here is that, so information on the blockchain is designed to be tamper-proof, right? But we rely on external data, which is satellite data, and we can't control the reliability and security of this data. So how do we make sure that the external data that we get, cannot be tampered with, or it's not faulty, for example? I mean, firstly, that's why we use public data, because basically there's a lower chance that, it can be tampered with without people noticing and maybe being corrected or faster. But I mean, secondly, that's why continuous innovations for us are so important. So I mentioned something about oracles and how they sort of connect on-chain and off-chain data. And now we have sort of entities like Chainlink, which basically uses a decentralized type of oracle. I mean, it's all very complicated, and I also sort of, I'm still trying to sort of grasp all these things myself, but basically it's a decentralized kind of oracle where they basically sort of triangulates different oracle node operators and different data sources, basically, such that the weather data is not relying on a single source. So if one is faulty, if there's someone tampered with one source, it can be detected and the system knows. So yeah, there's a lot of ongoing innovation in this space, and it's really exciting.
Thank you so much, Melin, for answering. And there's maybe a related question or a different question from Pedro. He is asking, could you please explain how the notarization in the blockchain reduces the risk of fraud by the insured?
Sure, I guess what I meant here was that so at different points of the insurance customer journey, so when the insurance is applied for, when the insurance, whether it's accepted or declined, how much the premiums are, and so it's also recorded on the blockchain. And this blockchain is available for anyone to check. So the partner that that's implementing on the ground, for us, for the insurer, for the regulator, for the farmer as well. And so when this information is notarized on the blockchain, it means that neither party can sort of dispute that they have this information. And with disaster payouts, especially, there's at least in my experience in Malaysia, there's always been the issue that people sort of double claim on benefits, right? Or people can go and say that I am entitled to this claim even when there isn't one. So on a very large scale basis, there's a very high chance of people claiming when they're not supposed to. So with the blockchain, you can easily sort of check that information from all sides, and it's a single source of truth. So in that way, it sort of reduces chances of fraud there.
Thank you. And there's another related question from Peter, which I like very much. So I would like to raise it here. Maybe you have a quick answer to that. So we have already the issue, right, with index insurance being complicated to explain it to low income emerging clients with low insurance literacy. It's already complicated. Now adding on top blockchain, isn't it making it even more difficult? Or how do we make sure that they understand it, customers?
Well, I don't think we sort of explain how blockchain works to the customer, essentially, right? Because I mean, from the farmer's point of view, as you can see from the customer journey, what they do is they interact with the seed company, they interact with the USSD menu. They know that they can check on the policy information via the USSD menu, or they can approach a village champion if they need to talk to someone. So I guess from the customer point of view, they don't really need to understand how the blockchain works, but they understand that what I can do is to check on my policy info myself via the USSD menu, and that's how it makes it more transparent for the farmer.
Yes, thank you. And there's a question from Anuj from Weather Risk. Would be keen to know where can blockchain save costs, and where can it add to the cost of offering weather or index insurance?
Yeah, I mean, I think maybe this is something that we can get back to you on in more detail, but some initial estimations that we've done have sort of shown that we can save on transaction costs at 41%, and that it can actually sort of reduce premiums to the customer by up to 30%. So these are numbers that I'm quoting, but of course, that I think more details we can definitely have an offline chat about it.
Okay, now we come to business transactions. Thank you. Thank you so much. Then I will please continue putting questions in the Q&A, and which we can raise later maybe. And then I would like to move on to introducing Philip Savatis from Swiss Re as the next speaker. So 1 second. So Philip Savatis is a senior product manager in the structuring team of Swiss Re's Public Sector Solutions division. And he has more than 10 years of experience in risk analysis, modeling, and structuring and design of insurance and reinsurance solution. So he has joined Swiss Re in 2011, and prior to that, he started his career as data analyst in Zurich before becoming a weather derivative underwriter in Swiss Re's environmental and commodity markets team. And he was appointed in 2017, end of 2017, to build up structuring capabilities for public sector solutions in the APAC region, where he was based in Singapore. And very recently, he moved back to Europe, relocated to Zurich, and so also shifted his focus in terms of regions to Europe, the Middle East, and Africa. So we have here an underwriting expert who used data a lot over the last decade. So very happy to hear from you, Philip.
Well, thank you very much, Nihar, for having me here in this forum. It's much appreciated. And thanks also to Hui Lin for this very interesting presentation that we just saw, and reminds me of basically minus the blockchain, very much focused on weather risk. We actually had a similar platform together with a Zurich-based, back then, startup, Celsius Pro, which some of you may have heard. And I can attest, this is also to all the questions, not an endeavor without challenges, but certainly a rewarding one in the end. So I did not prepare any slides owing to the time restrictions that we have, and I was just trying to be more general on the data use on our end. I think obviously our biggest interest as a risk taker is on the costing side and pricing side to properly assess the risk. That's what we need data for, and building a bit on the way our NatCat models are built up. Of course, in that sense, the base layer is the actual hazard. We'd like to know very well how the hazard is developing over time, what the frequency is that we can expect certain tropical cyclones to come in, earthquakes of a certain magnitude, or just rainfall temperature changes. I think that's definitely the base layer. And on top of that, what we look at is as an insurer, our exposure. We want to know what the individual vulnerability is of the insured objects. The more data we have at the end of the day, the better. And of course, data we can somehow use in a machine readable format. We also want to know how well there is mitigation measures in place. That's often something that goes maybe a bit between the hazard and the exposure, because if there is, for example, seawalls, where do you really place this? What kind of impact would that have on a flood? So this is things that are, one would think, very easy to come about and to implement into our models, but it's at the end of the day, it's really not that straightforward. And basically, what combines a bit the two is more the long-term view when we look at trends, where maybe we cannot immediately see that or we don't know how to account for it. The frequency of landfalling hurricanes has been going up the last, and I'm making up numbers here, 5 years. Is this something that we should see as the new normal? Or is this something that is just a blip at the moment on the map? And for that, all kinds of surrounding data sets and information, longer term sea surface temperatures and the like can be very helpful in assessing these changes and deciding on our end, is that change real, or is this just some blip that's gonna go away hopefully next year or the year after. And aside from the upfront risk assessment, there's obviously also quite a post-event interest in having proper data. One is what we call rapid loss assessment. It's basically upfront, you want to know sort of where is my stuff, and after the event, you want to be able to very, very quickly say where potentially the biggest impact of an event has taken place. And a bit from my angle, for the public sector, that is very helpful to help them deploy resources as effective as possible right after an event, that they don't just spread it out evenly over a city, but that you know exactly where the worst hit areas are. But yeah, coming back to potentially the settlement part of index-based insurance, I think that's where data is of the highest importance. And I think, was it in one of the questions, Pedro, I think, pointed it out, the fact that data needs to be transparent and trusted, most of all trusted by the policyholder, because I think we often underestimate that on a regular insurance contract, a loss adjuster comes, he comes up with a damaged value, and if you're as a policyholder are not happy with it, you have some means to object to it, to question it, and to go into arbitration. But if you are not happy with, let's say, the temperature or the wind speed that was reported by an agency, a Met Office, but that is the variable on which the underlying, on which that insurance contract is based on, then you really don't have any way of challenging that result. And so that's why I think, yeah, having transparent data that is as easy as possible to understand for the policyholder, I think is one of the most important aspects in rolling out this parametric insurance to a broad base of policyholders. And of course, that requires that you have an independent source that publishes this data, and they do so in a consistent way and don't change their calculation methods year on year or into regular intervals. And what also helps, I think that's something that is quite important, is that the publication of these data is lag-free. I think this was one of the challenges you showed, Huilin, that ideally you have a ground weather station where you know the day after what the rainfall amount was, but then that often isn't the case. So you resort to satellite-based data sets. And I mean, I'm happy to be pointed out to something new, but my experience is basically that the better the quality and the correlation of these data sets with what is happening on the ground, unfortunately, the longer the time for publication. And if you have to wait 4 or 6 weeks until you can tell an insured, by the way, that's the amount of rain that fell, and this is the according payout, I think that is also challenging to promote such products. But yeah, summing up, in short, I think for us as a risk taker, data is of tantamount importance, both upfront for the costing and for our view of the risk, to offer the lowest prices possible, so we don't have to load our view with an uncertainty premium because we don't have as much an insight as we'd like to, as well as for the more and more popular parametric covers for settlement post-event, as well as the loss assessment to steer resources most effectively where they can be used best. And I think that's it from my end. I don't know if there have any questions popped up I could answer. I'd otherwise hand it back to you, Nihar.
Yes, thank you so much, Philip. So I encourage again everyone to put questions here into the Q&A, but I would have some questions. I mean, Philip said that obviously data is important also in the sense that we want to ensure that customers trust the insurance solutions, which is related to trusting also the data. And you also said that sometimes you have the challenge of the maybe more accurate data might take more time to get, and which is an issue because paying out too late relates also that people don't trust the solution, or it is not allowed by the contract. So maybe you already hinted at different data sources like weather stations, remotely sensed data. So what is maybe a bit more on that? Where do you get your data? Is it very country specific, or where do you get your data? And what do you do if you have data bottlenecks, which we always have some way or the other? How do you deal with this? And maybe if you want, you can also relate to your experience in dealing with different providers. Like you said, you had the experience in the past and now they're different actors.
No, I think it is very, very country specific. And for example, if you tropical cyclone, there is sometimes WMO related supranational warning centers that collect data from the national Met offices that can be used. But as far as I see, mostly the clients like to use their national Met offices information, and the same goes as far as it is available for weather stations, that these come through the country, the Met office, or private providers that collect these. Maybe they go in this direction of the potentially the Oracle, I think, that was mentioned before. For weather risk, I would always say weather stations are first choice, but they're not always available and also not always at the client's location. And sometimes you can come up with a workaround that when these are things that you know is not a policy that will incept the week after you start talking, but it's a longer term project that may take 1 or 2 years to even go into effect. You can set up weather stations, and then if there is a certain overlap, for example, with a satellite data set, that can already help you quite a bit in terms of the costing process to get comfortable. But I mean, this is always the flip side of the coin. The client also has to be comfortable with it, because when we come up with a correlation, we're not present. So if we think that, let's say, 150 millimeter is an extreme event, and it turns out that this is not the case at all. I think, yeah, the history of data available helps both us in the costing as well as the client in being comfortable with the solution.
And do you collaborate with different types of actors now than you would have done 5 years back? I mean, not specific companies, but type of actors in terms of data provision or risk analytics or structuring index products? Or do you try to do mainly in-house? Or do you see that maybe you do it this way, this currently, but you see in 10 years you might do it differently because of the change in technology, because of the ecosystem of insurtechs changing?
So I think the structuring part we largely try to do in-house wherever we can, and we also believe that we have the capabilities there very well. As far as data is concerned, I mean, there is more and more satellite-based data sets, and for these there is of course experts with resources at hand with which we then co-develop data sets so they can be used for insurance purposes, or we basically, well, build on their data sets. And this is clearly something that I don't see us sending satellites, our own branded satellites, up to space. So for this, we rely on the specialists, and I would think there is more and more to come for various types of data assessments that we would like to partner with and make them part of our offerings.
Yes, no, thank you. No, I remember when I was working for an Indian NGO, we actually talked to a data provider and thinking about sending satellites to the space, but that was super unrealistic eventually.
It's becoming ever cheaper, so never say never. Maybe in 10 years we do have our own satellites. I
right.
wouldn't know.
Correct, yeah. No, thanks, Philip. So while the audience may still raise questions, I would like to move over to Tracy Urban from Oasis Hub and give a short introduction to her. So Tracy is the founder and managing director of Oasis Hub, which is an aggregator and a conduit of global environmental, climate change and catastrophe risk data, but also of tools and also of services, also some of them free and some of them are commercial. She is also in person an innovator of new technology when it comes to insurance and claims management, using machine learning and specifically for a tool called Oasis K-Man. Prior to this, Tracy was working in this sector also on innovations of climate services and including climate condition flood models, wildfire health and climate, and typhoon risk assessment tools at Imperial College London and at the EIT Climate Knowledge and Innovation Community. She has also been the director of SkyDevNet. And with this, I hand over to you, Tracy.
Thank you, Nihar, and thank you to the previous speakers. All really interesting topics. And good morning and good afternoon to everybody at the event. So really, Oasis Hub is an organization that really is a collaboration between data providers. How we started was as a collaboration between the insurance sector and academia and the SME sector. We always hear this question about data availability, and basically we wanted to scan the world for what data is actually available, and bring it into one place so that people can begin to know what's available and to access it more readily. We've obviously still got a long way to go, but we've been going since 2015, supported by European Commission funding from H2020 and EIT Climate Kick. But we've got a long way to go in continuing to encourage people to share their data on hubs such as Oasis Hub. And it's important to say there are a number of data hubs that you can use. So Oasis Hub currently has 2,800 members across a range of sectors, the insurance and reinsurance, banking and finance, as well as engineering and the sort of large consultancy sector. We currently have over 1,800 data sets and tools on the website, and that's to say it's not just the data we provide, but we're also bringing on board new types of tools that are being developed, such as some of the tools that have been talked about today. We have a range of geospatial and tabular formats, but we also provide data services in helping people access the information they need, but also helping organizations collect the data they need. So that's how we started. So the types of data, we have all forms of natural hazard data on the Oasis Hub. So drought information, earthquake information, flood in particular is our largest amount of data. And this includes both flood hazard models, and these are global. So with flood, flood models are available globally. So if you're having problems accessing flood models, there are providers that can help you there. Also, we have a climate change platform where we have worked with organisations such as the Bank of England to download some of the sort of criteria, some of the parameters in the global circulation models, particularly, again, working with the insurance sector and the finance sector for climate risk disclosure. So, but this could be done more globally. We also have landslide data and, a whole range of other types of tools and services. So let me move on. Oh, come on. So as I said, what we are is a collaboration network. So we take the data supply, so information from commercial data suppliers, academia and research organizations, and the public sector, which is where we find much of the data lies. And then our aim is to sort of transfer that into the data demand side, in particular insurance and reinsurance, banking and finance, but also other commercial sectors. And in doing that, we encourage collaboration when development of new tools. So we have quite a range of collaborations that have happened. For instance, there was a program called H2020 Insurance, where we combined insurers with academia and with ourselves, and also worked in co-design with the end user stakeholders. And I think that's a very important point that's made by a number of different agencies. Co-design of these products, and I think previous speakers have mentioned, with the end users, the stakeholders, and even the people that are going to use the products, is really important to embed new technologies and new insurances into the public sphere. The other thing, and this is done through our sister organization, which is Oasis Loss Modeling Framework, which some of you will know about. We also have a open source catastrophe modeling platform, which is free to use. The GitHub code is on this presentation, but it's easily available. And what that does is take some of the major catastrophe models and looks sort of independently at the potential loss and damage of some of those scenarios using an independent type of financial model and independent sort of statistical monitoring, really. So this is available and anybody can use it. There are other types of this type of modeling platforms, such as Climata at ETH, that are also open source. But as well as that, there's a lot of private sector models of this nature. So I'm really coming from the science side of the data production and tool production. And we've talked about what's going on in the future and the very near future. And I've used an example that I've worked on, which is the Oasis Cayman project, that combines both flood modeling, with drone information in terms of damages, so on the ground, immediate type of damage information, but also we've developed a citizens app that enables citizens to submit their data through an app, as well as helps them to record the information they've provided the insurer. So in other words, it gives control of the data that the end users are using to the end user, but is sort of established through a network of other partners in the process, such as loss adjusters and the insurers themselves. So basically, it uses artificial intelligence and machine learning to look at sort of imagery, but also looks at customer information as well and combines them to enable sort of faster payouts. And this type of tool is being developed, a lot across the world, AI and machine learning types of tools, which is really going to rapidly change the insurance sector. And I think many of our former speakers have talked to this, but, it's within the next few years. And finally, we're also looking at sort of longer term future where we're looking at sort of data fabrics, which is ways to accumulate information into a system where different users can draw out that information. And this type of tool enables the interoperability. We're looking at the interoperability of tools. We're looking at who needs what data at what point. So somehow combining some of the models and tools and services into a system where different stakeholders can draw out that information could potentially decrease costs in the future. And finally, I should mention an initiative that everybody can join, and this is my last slide, Alex, don't worry. I just wanted to mention the Insurance Development Forum and the work they're doing in terms of building a global alliance around sort of catastrophe risk monitoring, and looking at public-private partnerships and open source risk modeling. And through this group, we've also developed with the German government models that look at sort of how we work on the ground in developing capacity in insurance sort of modeling. So for instance, we worked on a project from ICI, this is my last sentence, where we developed catastrophe models for Bangladesh, and also for a flood model for the whole country of the Philippines. And in doing that, we work very closely with on-the-ground stakeholders at universities in both Bangladesh and the Philippines, and left those products with those stakeholders on the ground so that they can continually be updated, which I think is a model of how we need to be developing capacity at the same time as developing tools that can be used at sort of country level more in a more available way. So I'll hand back to Nihar.
Tracy, thank you so much for your presentation. I think we're running out of time, but maybe I can ask you a one-sentence question with a one-sentence answer. So what are the main challenges you face when trying to build up data set in a new country in terms of, robustness?
Again, it depends on the country, and it's really around creating open access to data, because I think the things like natural hazard data, open access, yes, can be open source, but likewise, we need to have the private sector opening up their data so that people know that it actually exists, and that there's the potential to use that, so that we don't keep creating the same data. Yeah.
Thank you so much, Tracy. I would like to thank all the speakers from Huilin and Philip and you, Tracy, for giving wonderful presentations, for answering the questions. And I would like to hand over to Alexander.
Thank you so much, Nihar, and thank you also from my side, Huilin, Philip, and Tracy, for the very, very interesting presentations, ideas, thoughts. It's almost a bit redundant to try and sum up all the different thoughts and ideas that we hear today. But I think this reflects the nature of our work a little bit. No, in the first session, it became very clear that what we're talking about will affect everyone, and it will be a key feature of our lives in the future. And we start having solutions, but we are not yet there. So it seems like there are a number of challenges that we're still trying to overcome, but there are also, here and there is light at the end of the tunnel. We are getting there. It's just not as fast and as upscaling as people may want to believe. And we do know that the role of the governments will be crucial going forward there. We won't do without them. We won't do without the support of the regulators, but then also the Ministries of Finance, Ministry of Agriculture, or the others. So I think that was, to me, kind of the spirit of the first session. The second session was then again, of course, much more on the data side. And I think we could, thanks to the presentation of Huilin, I think people now feel like we could do a whole day of talking about blockchains, no, or talking about the great initiatives that come up that Tracy pointed out to. So there are those many ways in which we are moving forward. Yet again, we are not yet there. We will need to keep on having our enthusiasm and our interest. And here goes my thanks to all the participants to stay until the very end, almost the very end, that we overdid it a little bit. But thanks very much for joining this. I hope you took some interesting bits and pieces with you. We will keep having those dialogues. We from the MEFIN, from our RFPI, I'm sure from MIN and from A2II as well, we'll keep having this exchange that hopefully is fruitful for you. If in case you should have any questions, don't hesitate to reach out to us at all. We'll try to answer as good as we can. There is also now coming up the last thing, it's a satisfaction poll, where you just can briefly give us, please, some insights into how you felt about the session and what you would like to see in the future. Now, Asier, we all will answer this. Is there anything else we need to do? If this is not the case, then it's left to me to say thank you so much for your interest. Thank you so much for being part of this. And I'm very much looking forward to see you in the next event that will surely come around the corner. Thanks so much. Have a good day, have a good evening, and stay safe.